Albert Einstein is widely quoted as calling compound interest the eighth wonder of the world, stating profoundly that he who understands it earns it, and he who doesn't pays it. When most people think about acquiring wealth, they intuitively imagine a linear progression because human brains are hardwired to understand the world in linear terms. You work for an hour, you get paid for an hour. You diligently save a small portion of your monthly salary, putting it away in a high street bank account, and you assume that in 30 or 40 years, you will have accumulated a decent, predictable pile of cash. But Warren Buffett understood from a remarkably young age that linear wealth is a fundamental trap that keeps the vast majority of the population tethered to the endless treadmill of trading their irreplaceable time for a fixed amount of money. True wealth, the kind of wealth that creates generational freedom, is not linear. It is exponential. It behaves precisely like a snowball rolling down a seemingly endless snow-covered hill. At the very beginning of its descent, you pack a small handful of snow together and start rolling it. At first, it picks up just a few individual flakes, and the progress appears painstakingly, almost frustratingly slow. You might push it for days and see almost no visible difference in its size, but as it gradually gets bigger, its surface area expands. With every single revolution, it picks up significantly more snow than it did in the previous revolution. The growth is no longer happening by addition, it is happening by multiplication. Eventually, it reaches a critical mass and becomes an unstoppable avalanche, generating its own momentum regardless of whether you are pushing it or not. In financial terms, this physical phenomenon perfectly illustrates what happens when your money starts making its own money, and then those profits start making their own profits. If you take £10,000 and invest it into a globally diversified index fund housed inside a UK stocks and shares ISA, you are planting the seed of an exponential curve. Assuming an average historical market return of roughly 7% a year, accounting for the natural ebbs and flows of the global economy, something mathematically fascinating happens. In the first year, your capital generates £700. The crucial step is that you do not spend this money. You leave it in the account, reinvesting the dividends. In the second year, you are no longer just earning 7% on your original 10 grand. You are earning 7% on the original principal, plus the £700 profit from the previous year. Fast forward 30 or 40 years, and without you ever having to add a single extra penny of your own hard-earned money from your daily job, that initial portfolio would multiply itself multiple times over, completely shielded from the taxman. This is the exact underlying mathematical reality of how Buffett amassed one of the largest fortunes in human history. A staggering, almost unbelievable fact that most financial commentators gloss over is that Warren Buffett made over 90% of his entire multi-billion-dollar net worth after his 65th birthday. People look at his immense wealth and assume he possessed a secret algorithm or insider knowledge, but his true secret weapon was simply time. He started building his snowball when he bought his first shares at the age of 11, and he simply gave it time to roll without violently interrupting the process. He understood that the most powerful variable in the compounding equation is not the rate of return, but the exponent, time. However, if you stop your understanding at merely compounding money, you are completely missing the bedrock foundation of Buffett's entire philosophy. Money is simply the lagging byproduct of a much more powerful and fundamental force, the compounding of human knowledge. When asked by an ambitious student about the ultimate secret to his phenomenal success, Buffett once famously pointed to a massive stack of annual reports, trade journals, and financial documents, advising the room to read 500 pages like that every single day. He noted that knowledge builds up just like compound interest. While reading 500 pages a day, is clearly an extreme and largely impractical target for an ordinary person balancing a full-time job, a family, and a mortgage in the UK. The underlying principle remains absolute. Committing to reading just 10 or 15 pages a day equates to roughly 3,600 to 5,000 pages a year, which translates to about a dozen substantial, rigorously researched books. Over the course of a single decade, you will have quietly absorbed the life's work, the catastrophic mistakes, the profound epiphanies, and the distilled wisdom of over 120 of the smartest minds in human history. But here is where the true magic of cognitive compounding kicks in. Knowledge does not merely add up, it multiplies. Buffett's longtime business partner, the late Charlie Munger, famously championed the concept of building a latticework of mental models in your head. When you learn an isolated new concept in behavioral psychology, such as the tendency of human beings to blindly follow the herd, it sits quietly in your brain. Months later, you might learn a seemingly unrelated concept in macroeconomics, such as how housing bubbles are formed in the UK property market. Suddenly, a spark jumps between those two distinct ideas, and they connect. You suddenly possess a profound, multidisciplinary understanding of why intelligent people make terrible financial decisions during a market frenzy. Every new fact, historical anecdote, or scientific principle you learn actively attaches itself to the vast web of what you already know, creating an increasingly deep, complex, and nuanced understanding of the world. You begin to see asymmetric opportunities that others entirely miss. You make remarkably better decisions, not just in your investment portfolio, but in navigating your career trajectory, negotiating business contracts, and avoiding catastrophic life choices. Buffett heavily relies on a concept called the circle of competence. By continuously compounding his knowledge, he intimately understands the boundaries of what he knows and what he does not know, allowing him to step over 1-foot hurdles instead of trying to blindly leap over 7-foot hurdles. In a modern society plagued by endless digital distractions, algorithmic social media feeds, and shallow, fleeting information, dedicating uninterrupted time to deep, continuous learning is a massive, almost unfair competitive advantage. Knowledge is the ultimate compounding asset because hyperinflation cannot devalue it, stock market crashes cannot erase it, and the government cannot tax it away from you. This leads directly and seamlessly into another completely invisible, deeply unquantifiable asset that aggressively compounds over a lifetime: your personal and professional reputation. Warren Buffett is universally famous for his exceptionally strict ethical code and his uncompromising stance on corporate integrity. He frequently warns his executives with a stark directive: lose money for the firm, and I will be understanding. Lose a shred of reputation for the firm, and I will be ruthless. He correctly noted that it takes 20 entire years of consistent, reliable behavior to build a sterling reputation, and just 5 minutes of foolishness to permanently ruin it. Think deeply about how the mechanics of trust operate in your everyday life. Whether you are navigating the fiercely competitive corporate environment in the City of London, managing a regional manufacturing plant in the Midlands, or simply running a local independent trade business serving your immediate community, trust compounds in a remarkably similar fashion to financial capital. When you consistently show up on time, meticulously execute exactly what you promise to do, deliver immense value, and, crucially, admit your inevitable mistakes with radical honesty, you are depositing a small but highly valuable amount of trust into the relational bank account of your peers. Over time, this does not merely result in people passively liking you. It creates a deeply entrenched, incredibly powerful network effect. In the brutal world of business, a heavily compounded reputation acts as an impenetrable economic moat. It creates what economists call a trust premium. Clients and customers will actively choose you over a cheaper, faster competitor, even if you charge a significant premium for your services, simply because they possess absolute psychological certainty that they can rely on you when the pressure mounts. Incredible opportunities, lucrative partnerships, and career-defining promotions will naturally flow your way through the invisible grapevine of serendipity, completely bypassing the need for you to constantly pitch yourself or aggressively market your skills. Buffett and Munger famously finalized multi-billion-pound corporate acquisitions and complex financial agreements on nothing more than a brief verbal conversation and a firm handshake. That astonishing level of operational efficiency and frictionless execution is only possible because they had spent over 6 continuous decades meticulously compounding mutual trust and unshakable integrity in an industry often known for cutthroat deceit. When your words and actions align perfectly over a long enough time horizon, the compounded goodwill creates a gravitational pull that attracts high-quality people and high-quality opportunities into your orbit. A compounded reputation opens heavy, guarded doors that no amount of raw financial capital could ever unlock. Yet, despite having millions in the bank, a vast encyclopedia of knowledge, and a universally respected reputation, all of it is rendered entirely useless if you lack the biological, physical, and mental capacity to actually enjoy the fruits of your long-term labor. This is where the vital compounding of your daily, automatic habits comes into sharp focus. We unfortunately live in a modern culture that is desperately obsessed with dramatic, overnight transformations. We crave the 30-day fitness shred, the instant detox programmed, the miraculous weekend life overhaul. But complex biological and psychological systems simply do not operate on the basis of intense, short-term bursts of effort. They operate entirely on the ruthless, inescapable logic of compounding over decades. Your life today is essentially the undeniable sum total of your past, repeated habits. How physically fit and energetic you are is merely a lagging indicator of your daily eating, sleeping, and exercising habits. Your current bank balance is a lagging indicator of your long-term saving and spending habits. The level of clutter in your home is a lagging indicator of your daily cleaning habits. The author James Clear popularized the mathematical reality that if you can manage to get just 1% better each and every day, you will inevitably end up 37 times better by the time a single year is completed. Conversely, if you allow yourself to get 1% worse each day through neglect, you will mathematically decline almost all the way down to 0. Let us apply this rigorously to your long-term health and well-being. Eating a single highly processed chocolate bar today does not make you immediately unhealthy or fundamentally alter your body composition, just as lacing up your shoes and going for a single 20-minute brisk walk does not make you instantly fit and athletic. The physical results of these individual, isolated actions are virtually invisible to the naked eye. Because there is absolutely no immediate, tangible feedback, it is incredibly easy to justify slipping into bad, destructive habits or to cynically abandon the good ones. This is known as the plateau of latent potential, a period where you are putting in the daily work but seeing absolutely zero external results. However, if you project those tiny, seemingly insignificant micro-decisions over a timeline of 5, 10, or 20 years, they compound into vastly, dramatically different realities. Warren Buffett, despite his famously eccentric diet heavily featuring cherry Coke and fast food, has rigorously and religiously compounded exceptionally healthy habits regarding stress management, sleep, and emotional regulation. He aggressively protects his daily calendar, ensuring that he routinely has vast stretches of unstructured, quiet time to simply sit, read, and think deeply without being interrupted by frantic phone calls or urgent meetings. By mastering these small, fiercely protected daily routines, you build a resilient physical and mental engine that can sustain long-term success without suffering a catastrophic burnout. You compound the energy required to actually push the snowball. However, absolutely everything discussed so far, the accumulation of financial wealth, the deepening of intellectual knowledge, the building of a bulletproof reputation, and the automation of healthy habits, relies entirely on one absolute, non-negotiable necessity. Without this final element, the entire architecture of compounding crumbles, and the snowball shatters into a million pieces. That ultimate element is emotional discipline. Buffett astutely observed that the stock market is, at its core, a highly efficient device for transferring money from the frantic, hyperactive, and impatient to the calm, rational, and patient. You can possess a genius-level IQ. You can hold multiple advanced degrees in economics, and you can understand the exact mathematical formula of compound interest down to the final decimal point. But if you panic when the storm hits, you lose entirely. Let us be brutally realistic about what long-term compounding actually feels like in the real world. It is rarely exciting. Most of the time, it is incredibly boring. It is a slow, methodical, unglamorous grind, and occasionally, it is absolutely terrifying. Over a standard 30 or 40-year investing horizon, you're mathematically and historically guaranteed to face severe, stomach-churning market crashes, devastating economic recessions, and global crises. You will inevitably wake up to apocalyptic headlines declaring the irreversible collapse of the global financial system. You will log into your brokerage account and see that your hard-earned, meticulously built portfolio has suddenly dropped by 20%, 30%, or even 40% in a matter of weeks. The natural, evolutionary, hardwired human response to that kind of severe psychological stress is to flee to safety. Your primal brain screams at you to sell everything, retreat to the perceived safety of cash, and wait for the terrifying storm to magically pass. But the absolute truth of compounding is that the moment you capitulate and sell in a panic, you have violently interrupted the process. You have essentially taken your massive, meticulously rolled snowball, smashed it against a rock, and forced your future self to start rolling a brand new, tiny snowball from the very beginning of the hill. Emotional discipline is the rare, incredibly difficult ability to sit firmly on your hands when every single fiber of your biological being is screaming at you to take action. It is the emotional maturity to completely separate the frantic, fear-mongering noise of the daily 24-hour news cycle from the fundamental, underlying reality of your long-term, decades-long strategy. The legendary investor Benjamin Graham, Buffett's esteemed mentor, conceptualized the market as a manic-depressive business partner named Mr. Market. Some days, Mr. Market is wildly euphoric and offers to buy your shares for an absurdly high price. Other days, he is profoundly depressed and offers to sell you his shares for pennies on the pound. The undisciplined investor allows Mr. Market's wild mood swings to dictate their own emotional state. The truly disciplined investor, however, simply uses Mr. Market's irrationality to their advantage, buying when there is unwarranted panic and selling when there is unjustified greed, but mostly just quietly ignoring him. Every single time you successfully navigate a terrifying financial crisis without making a foolish, emotionally driven decision, your psychological resilience quietly compounds. You become significantly calmer under immense pressure. You become significantly harder to manipulate by fear or greed. Buffett. Ultimate superpower is not a complex financial spreadsheet or a proprietary algorithmic model. It is his unshakable, rock-solid temperament. Mastering this profound emotional equilibrium, the ability to remain steadfast and perfectly bored, while the rest of the world loses its collective mind, is the true underlying secret to letting the mathematical magic of compounding completely change the trajectory of your entire life.